Hi, it's Brian Shannon from AlphaTrends.net. Today is Tuesday, the 2nd of February, 2009. We're going to go ahead and take a look at some new trading ideas for tomorrow after we've reviewed the ones that I had mentioned on Sunday. First up, let's take a look at Dish Network, symbol DISH. You can see here in the daily time frame, the stock continues to hold up here from its recent gap higher. And on that 10-minute time frame, we can see that the stock is holding above the rising 5-day moving average and has found support there, actually. If you're going to get involved in this stock, if you did get involved in this stock, as I mentioned, perhaps above this level, or probably above this level would be the safer bet. But if you've gotten involved here, I think worst case stop right now is below 1265. We're still in a bear market. I'm going to reiterate this over and over again whenever I talk about any long positions. Do not get too comfortable with these. I have no idea what the fundamentals are or when the earnings are due out on this company. So if you're going to hold these overnight, you're on your own in that regard. So be sure to do the homework necessary to make sure that you're not putting yourself at too much risk. Here we see late in the day that the stock had gotten above a little bit of resistance. It did so with some heavier volume, but then last bar of the day had some heavier volume. If you're not involved in this stock, which I'm not, I'm thinking maybe above this level. I would think that even here you could raise your stop to this level, even near about 1272 or so. Risk management is truly job number one. Here's a stock, that's looking like maybe it's got some potential to continue higher, but we are in a bear market, so continue to be careful with any longs. Maxim Integrated Products, MXIM, continues to hold up well. Also, it's above its rising 10, 20, and 50-day moving averages, and holding above this level here that had been prior resistance. The weekly time frame is still obviously a mess. Perhaps it's going to run up towards these lows from last year, though, which would obviously be a real nice trade. Be sure to check the fundamentals. There was no reason to get involved in there, and still looks like there's not, but continue to keep an eye on this to continue to show better signs of recovery in here. You can see that it is below the 5-day moving average. The 5-day moving average is declining, so I would think it's probably got to get at least above 1340 or so, and I wouldn't buy it, I don't think, and if it ran up to there, unless it ran up, pulled back, and showed us a higher low, maybe near 13 or so. So in other words, maybe it looks like here's that test. Here's where we are right now. If it maybe came up like this and then pushed higher, stop will go below there. Akamai I had mentioned is a potential short sale underneath $13.40. That was this level here, and this is why you don't fight it. You can't anticipate the weakness. You have to get involved once the market confirms that it's weak by making a lower low here. So there was no reason to get involved in Akamai. You can see it gapped higher, rallied up, and then pulled back, and then continued to move higher. So scratch Akamai off the list. No reason to continue to watch that one, as buyers are clearly involved, back in that one. I'd suggested watching NAT on a move below these recent lows here at about $28.40. So this stock did drop nicely, and you can see. Let's take a look at the 2-minute action here. It had gapped lower, rallied up, and then rallied up again in here, and then it began to decline. So if you're involved in this stock, I would say maybe put your stop worst case right about 28.20 or so, and this stock is looking like maybe it's going to continue down. We're at this little trend line here potentially, so you've got to take profits in this market, long or short. That's something I tried to make clear today on Twitter when I was talking about the markets overall. We were looking at NASDAQ as a potential short sale. Unfortunately, this stock gapped lower, so there was no reason to get involved here. I'd say scratch that one off the list for now, maybe in a couple days after it recovers a little bit. And if it gets trapped under that declining 5-day moving average, it'll present us with a better low risk opportunity to sell it short. But right now, I'd say you don't want to get involved in this one. Pool, this stock, like I was saying, really needs to break below this $15.30 level or so, and then that's where it could potentially get hit hard. It's still holding above that level, so continue to keep this one on your radar. In potentially, maybe getting below here tomorrow, you establish a small short position with a stop right around here, which would be below that 5-day moving average, which is starting to roll over as well. So this stock could get going here. I would say this is a good one to keep an eye on tomorrow. Perigo actually reports earnings tomorrow morning before the open. If you got involved, I hope you did so only with options, because there's just too much risk, holding in front of earnings. The stock looks like, to me, like it ought to get hit hard. Let's see how the stock handles these earnings, and there could be potential disaster here in this stock. I don't have a position. Hopefully, you're in a position that doesn't offer too much risk overnight. Teva Pharmaceuticals still holding above this bigger level that we've been watching here. At about $41 a share. If it can break convincingly below that, then I think that this stock could really get hit hard. We've got a declining 10, 20, and 50-day moving average. The 50-day moving average is declining, and here this stock, it did get below it, but again, you don't want to sell short on a gap lower, because look how quickly it recovered and stayed above that daily VWAP. So you can look at this and say, well, I thought it was a short below 41 or 41.20 or so. It never got below 41, but let's say you shorted it below here. You don't sell short these gaps. You want to wait. The best case scenario for this stock today would have been, it gaps lower, rallies up right around that daily VWAP. Let's look at the 1 minute time frame, and then broke down. That would have been the place to sell short, is below here, with your stop just above that level right there. That would have been the best place to sell it short. That's what I was looking for in this stock today. It never occurred, so there was no reason to get involved. Vivo, V-I-V-O, this is one I said, possibly below 21.15. It did get below 21.15. This is a choppy stock. I had also suggested that the worst case stop in this one was at about 21.60. So if you did get involved in this one, then it should have been stopped out as a loss. I still think the stock is something I'm going to keep an eye on for potential larger breakdown, because it just it looks pretty ominous on these longer term time frames. I would say you want to keep your eye also on PSYS. Continue to look at this one. It's not something I had mentioned over the weekend, but something I've been mentioning numerous times over the past several weeks. This monthly time frame just looks like a big disaster waiting to happen. On the 30-minute time frame, you can see it's struggling with the 5-day moving average after trying to rally in here. It's not giving us a reason to get short yet. Perhaps below this low, and maybe a stop right up above there. No specific recommendation, but it sure looks vulnerable to further downside to me, as does another stock I've mentioned numerous times, but hasn't broken down yet, and that's X-Ray. Dentsply is the company here. X-Ray, X-R-A-Y is the symbol. Perhaps in here you want to sell it short below this low, with a stop just above this 27.50, so maybe about 35 cents risk. Worst case stop. If these worst case stop levels get hit, I'm going to tell you tomorrow that there's no reason to continue to watch it on a short-term basis. And if you are, using wider parameters, and I encourage you to make these ideas your own in managing risk based on what you're comfortable with in this market. But the overall choppiness of this market makes me, very quick to get out of these trades once they show that they're not working. CIH Robinson Worldwide. Here's a stock that gapped lower here, has been kind of holding below that level on the weekly time frame. On the daily, you can see where it's having trouble, and on this 10-minute time frame, perhaps below here. It's a higher price stock, so, going with smaller share size. The 5-day moving average is still advancing a little bit, so maybe not quite tomorrow, but or the next day or so. This one looks vulnerable though in the short term. I don't know if you saw BEAV reported earnings, and I had actually traded this one to the long side. It acted pretty good here on the 1 minute time frame, came down to VWAP, and I bought it right in here. Just for a day trade today, but I'd say you want to continue to keep an eye on this one, just because it does still have a bullish looking daily time for chart, and we can see that the stock has was up on big volume today, it's cleared this level. No specifics, but they were up on earnings, which is unusual in this market. So that one, continues to look good. The semiconductors I had mentioned, if they get above here, could continue to go. That would help, obviously, MXIM. I think you would also want to keep an eye on this one, which is ISIL, Intersil Corporation. Intersil may be getting above 965 or so with a stop, worst case stop right down here at about $9.40. So let's say 25 cents is your maximum risk on this. If it gets going here on the daily time frame, you can see that it's looking like it was up on increasing volume. Now it's consolidating on lighter volume. It's got a chance to run to this 1035 level, and if it can push past there, then maybe it's going to be a more sustainable rally. We remain in a very high-risk environment. The IYR didn't break down. It's still holding above this level at about 30 or so. Breaking below that area, I think, could be really damaging to this market. And if that's the case, then what you want to do is you want to get involved in the SRS, which I had inadvertently said SDS yesterday and brought up the chart of that. SDS is the double short spider fund, but the SRS is the real estate fund. So sorry for any confusion there. Manage risk.